Do you think there's a shot that one of the current traditional financial players will like properly venture into this? We talked about JPMC already, and properly venture into this and then kind of give all these new up and coming players a run for their money. What are the chances of that?
I think every time we've thought that the empire won't strike back, it does figure out a way to strike back in a different format, different fashion. I think the probability is pretty high that one of the big global players with true global vision will take a shot at it. Whether they succeed or not is going to come down to whether they change the operating models in the way they operate today.
Hello, and welcome to the 60/40 podcast, the only podcast that deep dives Asia's tech and business headlines with the leaders actually driving the change. My name is Maria. I'm here with my co-hosts, Peter and Prashanth, and Miracle of Miracles. Hello. We are all here in studio.
Yeah. Unbelievable. A full studio session.
I know. You know it's F1
When was the last time? It's definitely F1
week in Singapore. When was the last time we were all here together?
F1 last year? I don't know yet.
Dude, it's easily been like
3-4 months.
Yeah, 3 or 4 months. It's
Before
been a
summer,
long
for sure.
time.
Yeah.
Long time.
I could see all together.
It's pouring today. It is pouring today because Singapore is cloud seeding.
I totally agree with that. Yes.
I buy into the cloud seeding. Singapore managed the weather during F1 week.
Definitely. Joining us today is Milind Sanghavi, the co-founder of XWeave, a startup that is building the pipes for the next generation of stablecoin infrastructure. They just raised a seed round backed by Jungle Ventures, Lightshift, and Manyala, all on the promise of shaking up the $30 trillion cross-border payments market. Milind, welcome to 60/40.
Thanks a lot. Thanks for having me around. Looking forward to
And we should
the chat.
correct it. It's not Manyala anymore. It's called Liminal.
Liminal. Yes.
Oh, it is called
It's
Liminal.
the artist formerly known as Manyala.
Yes, you're right. You're right. The goal of having Milind on today's podcast is to really be able to deep dive stablecoins. We've talked about it a few different times. I think the technology is obviously super new, super interesting, and not that well understood. And so we're using this as a crash course 101 session for ourselves.
I look forward to learning.
Yes, exactly. But before we get there, we want to quickly run through some headlines that kind of piqued interest within our group chat and also related to the later stablecoins discussion. So this week, OpenAI rolled out something new, a direct buy link inside of ChatGPT. They're starting first with Etsy, and I think they said they're going to roll it out to Shopify later this month. And so the question is this finally the first step towards agentic e-commerce? And where AI is obviously not just recommending products, you're doing it. And then like, what else should we expect to see from here?
Look, I think we talked about this a few times and we said at some point we will see OpenAI go up the stack into the application layers. Yeah. And this is a very profound one. In fact, I think we discussed this a few weeks ago, which is why I was, very curious to see this come up so quickly. I think
we nailed it.
We nailed it. I think we nailed it. Pretty much said
we pretty much said
we will have a time where research will be done in an AI LLM context. The recommendations will then be compiled into a table, and all that will be missing would be a buy button.
Yeah.
And here we are, right? We have a buy button. And I think what was more profound is that they also came out with this new protocol, ACP, which is Agent Commerce Protocol, which allows small brands, whether they be D2C brands or Shopify, storefronts, to actually now effectively open up their inventory, their products onto the agents from ChatGPT. So I think it's quite profound. I think the discovery has fundamentally changed as we see the search volume on Google and the click volume on Google come down and the context inside of these LLMs go up. I think, you will start seeing more and more discovery here. So I could actually go to ChatGPT very soon and say, hey, find me a pair of shoes that are on sale under $100, right? So, and it would find me those shoes. And then I could say, show me this in black, right? So I could actually have an interactive shopping carousel. And then I could have it even kind of, recommend and personalize a lot better because it has memory. And then finally, I just get to click and buy. And I could even say, okay, well, wait till this thing shows up on sale and then go buy it, right? So I think we're heading in a beautiful direction now, but there are profound effects, right? If you're a Walmart or if you're Amazon or if you're some of these big box retailers, you're now saying, man, I acquired all these customers, but my customers historically came to me through Google or Yahoo, and now those customers are on OpenAI. Do I open up to OpenAI and kind of have it become the connector, or do I try to keep my customers on my side? I think that's going to be interesting to watch.
Yeah, I like the business angle of this. I also pair this launch with just a few weeks ago, OpenAI updated their long-term cash burn forecast. They had previously said they were going to burn $35 billion until the year 2029. They modestly increased that cash burn up $80 billion. They now say they're going to burn $115 billion in the next 3 or 4
They
years.
got to pay for that Oracle.
The pressure, they got to pay for the Oracle deal, clearly. The pressure to monetize is going to start to build quite rapidly. And the two most obvious places to go are advertising and commerce, right? Those are the two most obvious. And voila. So those two things are not coincidental.
Have y'all tried it? Because I got on ChatGPT and it is only available to US shoppers right now, but I just wanted to see. And so I was like, go to Etsy, find me some gold rings or whatever. And then, but the thing that I realized, I think it's going to put pressure on the chat function because you don't shop via words, right? Like all e-commerce sites are beautifully displayed photos. And so even if it's going ahead and fishing out that information for you in the table, I do think I actually think the UI of ChatGPT over time will start to shift to actually be able to accommodate for all of
But it
this.
already does that. Like if you say, hey, show me the stock and show me the performance of the stock over the last 6 months, it actually has a chart, right?
Yeah, but I will show you their shopping search results.
I think it'll get
no girl is shopping like that.
So I think they'll probably bring in maybe
I don't care what it looks like, right?
It's like, but look, I think they'll come up with a carousel at some point.
Yeah,
and,
it'll get better.
Yeah, but
actually, the interesting part is if you look at our part of the world, there's a ton of conversational commerce already happening, right? On WhatsApp, on Messengers, on Instagram, WeChat, TikTok, all of that. So it is going to be interesting how it works in different parts of the world. Like that's what I was thinking about was in some places where it's almost like I know what product I want, like it's a very quick checkout, but discovery may be a whole different kind of experience. I think.
Chat GPT or OpenAI going from 35 to 80 to 100 in terms of a burn, that's all fine. But I think they will steal a lot of business share from commerce, from hotel sites, from comparative search.
I think as a end user, it's going to be exciting because they're just going to come out with so many new products and experiences to drive monetization, and it will be things like you've never seen, right? Just a completely different experience, and it's going to be very exciting as a user.
Do you guys feel like people are going to start shutting down their websites and their backorder systems to find out even? So today, for example, you can go on GPT and say, find me that black shoe in Singapore and give me a comparison on price. That's because they can access it. But you think that merchants will stop shutting it down to own the traffic?
I think if, typically you see merchants opening up where traffic already is, right? So if a large amount of commerce-related traffic is on ChatGPT, then I think they will be compelled in some ways to. This is classic prisoner's dilemma, right? It'll be very interesting.
I think it just extends the. I think on this issue, it just extends the trend and put it on steroid that ultimately, in the end, if you're a manufacturer of something to the end consumer, value is accruing more and more and more to the brand.
Yes,
right.
Exactly.
And the thing is commoditized, right? So it is all about brand building and all about value accretion to the brand. Sonos, over 20 years. The hardware itself, although it was great speakers and great engineering and stuff like that, but to be honest, a huge amount of the cachet was the brand as, actually the functionality was replicated many years ago, not until the debacle over the last year. But the main thing about the debacle over the last year with Sonos was the destruction of the brand. And so you will capture high margins in a very diffuse world if you have brand.
So D2C easier then.
Yeah.
I mean, you're buying cars now directly from the brand, right? You buy Tesla from the brand.
Exactly.
So we never did that. We always went to a dealership. We had to test drive it. So the world is changing in that sense. So now you could actually go and comparison shop your car and buy it on chat.
The last thing I'll say on this is that I feel like brands are going to have to open up to these conversational conversations. It's like when you had a mom and pop shop in-person store, like physical retail store, and you didn't want to go online because you wanted to preserve your in-person traffic. And that was a terrible idea. And we saw ultimately everybody go to digital commerce because that's where the traffic ends up being. And there's still that like very important experience of having the in-person part. So I just think that I think maybe some people will try to close off their systems to it, but it's just, that's a futile.
Yeah, totally futile.
Yeah. Okay. Now,
Stablecoins.
Yes, stablecoins. So, but it's good because obviously the other question is as we move into a world of agentic commerce, how do we actually power and finance and build out those infrastructure rails? So let's go to stablecoins specifically, and maybe we can start with the foundational question, which is, Milind, if you don't mind, putting on your professor hat for a second, tell us, what are stablecoins?
Sure.
How do they work? Like, what's the technology powering them? And then what gets you so excited about this technology?
Yeah, I mean,
And are they indeed stable?
Fair enough.
Yes.
to be very honest, in stablecoins, there's like multiple different things. There's something called algo stablecoins, and there are true stablecoins. So the way I think of a stablecoin is kind of a fully programmable money that is backed one-to-one or some amount of a regulation that oversees what is out there. And it is actually completely movable on the chain. It is super powered in terms of what it can do. But what's also really cool about it, in my perspective, is that the regulators actually approve it. And so there is a way where you can come back and say, look, I have one of X stable. I want one of what is the backing currency behind it. And that gets delivered to you, in that format. I think what's really...
And most of it is one-to-one, or like what's the... Yeah, that I'm very interested in, like, what does the backing mean?
That's like Pandora's box a little bit. But I think most of them, based on the regulation that they sit in, based on the markets that they sit in, I would say the majority of the ones that are being used today are one-to-one backed. There are options, like I said, there are these algo stables, which are like much more complicated in terms of what they hold and how to redeem them. But they're probably on the edges of what is going to be, I think, the future in some format or the other. I mean, I've been in payments a long time, and every time we've thought of binary worlds or like, hey, only this will exist and this won't exist, I think we've always proven wrong. Right. So I think there's always going to be different varieties and kind of, I would say, spins, angles on this whole stablecoin concept. But I think at the core basic of it is, look, it's fully programmable. You can do different things with it. It's allowed by certain jurisdictions. More and more jurisdictions allow it. And one version of the future will exist powered by stablecoins for sure.
For our viewers, just explain, what do you mean by it's fully programmable?
When something's on the chain, there are things that can be, in a very simplistic world, you can add things onto it, like provenance, proof, or whatever you want to call it. You can attach it to that coin. So for example, when I send you something, I can say, hey, I'm paying you for this, and potentially put the receipt or even the rewards or the warranty or something like that behind it. Now, there's very few people doing that, but that is a use case that can exist. There's also the ability to do kind of all of the KYC and know your customer. What's the kind of, is this clean or not? Is the customer clean or not? And attaching that onto it. And so that's why I think of it as, it's a bunch of code that has the ability to be super powered and add a lot of things onto it. It adds a different level of complexity, but I think the way I think of the entire stablecoin world right now is it's an ecosystem that's just starting out. If we step away from our LinkedIns where like stablecoin all over the place, the reality is... Sorry?
I think that's just your LinkedIn.
That's not my LinkedIn.
That was like
I just got Nike ads.
But I think it's an ecosystem that's being built in real time. I think there's use cases being built in real time. But we think of it as very, very early, primarily because of the use cases that are sitting on right now.
Okay, so stablecoins is a form of digital currency, regulated, and all stablecoins are tagged to some fiat currency, right? So like
Not necessarily.
Most of them are tagged to USD. What?
No, not necessarily. So you could actually, like he was saying, I think you could, my understanding, correct me if I'm wrong here. Yes, most commonly, it's pegged to a US dollar. Yeah. So someone takes a US dollar from you and gives you $1 US stablecoin, XUSD, right? But the other way to do it is I could also create a basket of cryptos,
right? And
I could take a value of those cryptos and I could issue against those, right?
Yeah.
And typically you would over collateralize that. So you would say, because the cryptos are so volatile in their price, I would take $155 or $180 worth of cryptos, like it could be Ethereum, it could be a bunch of coins in there in that basket. And then I would give you one US dollar equivalent, right? Because in case there's some fluctuation, I still am going to be over collateralized.
You're kind of almost hedging through the basket.
Exactly.
Right. The reason that exists in the past, heretofore, is there weren't many choices for stable options.
Correct.
Now, with the emergence of US dollar-backed stable coins, isn't that a more logical, like, isn't it just easier and more
It's more
shortcuts?
preferred, I would
It
say.
shortcuts everything, right?
What would you say? Would you say it's more preferred to have a US dollar, especially after the Genius Act? I'm sure we're going to touch on
which
that.
is, yeah.
I mean, I think with the way the regulation is moving, you will see more and more of like what is one-to-one back. The problem that comes in when you're not one-to-one back, there's a decent amount of upside potential that you're sitting on in some sense. But if you're looking for stability and usability and, it's like, wait, why do I know that one Sing dollar note is worth one Sing dollar? Because I know what it's worth.
Right.
And I think there is a beauty in that simplicity.
Yes.
And I think that is what is actually going to drive more utility over time.
It also feels safer because then you're like, in order for an XUSD or SGDC or whatever it might be to be like, there's a regulator behind it.
Right.
And so it feels like, more stable than your typical crypto transaction.
Yeah, I mean, I think it's a different angle to it. I think the word more stable is always a bit dangerous, right? When it comes
It's called
to
stablecoin. Like, what else could, what are you saying?
what I was trying to say with that was basically, it's not like an algo stable is not stable, right? It's just, it has different mechanisms that power it and therefore potentially different use cases.
I mean, the US Fed runs on an algo. Effectively, right?
right.
Like it's not gold backed. It's
Called
not
Donald Trump.
No, but it is effectively an algo, right? It's looking at all these factors.
Yeah.
So that's the ultimate stable US dollar, right?
Yeah,
so
right.
anyway, sorry, didn't mean to cut you off.
I'm also like the weird guy at the crypto conference that's saying, yeah, regulation's really good. Like we like regulators. We want very clean regulation. Most of the time I'm almost thrown out of those conferences.
Is that right? Even now? Like, I think it's pretty obvious that would help.
There's very clear two
There's
bands.
still the religious left or whatever, the left.
Whatever.
I don't know if it's left or right
The token
now.
bros. The token bros live on.
Yeah.
And I think there's a use case for the token bros too,
Yes, of
right?
course.
Like, for sure. But I think for the way, if you look at long-term viability and about, how do you kind of create the commerce around it? And how do you create utility around it? We think regulation is really good.
Yeah.
Right? And at XWeave, like that's what we're focused on is we're only doing regulated businesses. We're only working with regulated partners. And, there's enough conversations, and we were just having this earlier, like, are we pushing max depth?
Yeah.
And we're okay to not push max depth because, there's things still being figured out.
Yeah. Okay. So stablecoins supposedly marry the efficiency of crypto with the stability of fiat. What are the use cases for that?
Right now, if you look at somewhere anything between 60 to 85% of the volume that's happening on stablecoins is what's called exchanges paying liquidity providers, or it's kind of within that ecosystem. What's now starting to happen is you're starting to see remittance players starting to use it, lots of PR around it. You're starting to see a lot of treasury moves that are happening where I'm moving money around countries, in some cases, between almost ledgers, if you want to call it that. And there's a very, very strong use case for stables that over there. And I think that there's a version of stables that's just starting to emerge, which is local stables.
Is the big near-term prize the international remittance market, or is it more trade routes and manufacturers in Bangladesh wanting more stable trading with their seller in America?
I think the answer is option E, all of the above. Because we're so early in this ecosystem journey where there's going to take different things and like almost silly putty on the wall to figure out what's going to stick. And also, this is now you're getting a generation of like boring guys like me who've been in the web, the old school payment side.
Yeah.
And we're starting to marry the strengths of one and the strengths of the other. And so you're going to see remittances move in different ways than they do today, with real-time settlement being literally intrinsic to it.
So the most bullish case for stablecoins is like literally reworking all of the financial rails of the world.
Yeah, why not?
Yeah.
I mean, I think if you're hanging out in LATAM, I mean, we have the curse of or the advantage of being in Singapore, right? So we don't think about these problems. We're also holding a currency that's very stable relatively. But if you're in LATAM
Argentina,
or if you're in Africa, your currency is deflating 100% month on month, right? So you're going to want to get out of that currency. Historically, you've had to kind of find a BaaS player in some remote part of the world who would onboard you, and you don't really know if you have that money or if the BaaS player is regulated or compliant. So now, actually, you get to have an on-chain play. So if I'm sitting in Turkey, or if I'm sitting in Africa, the first thing I'm doing is I'm taking my my currency, home currency, converting it onto US dollar stable.
Yeah.
And then whoever will accept it, you have my business.
Just building on that, we operate a business in Bangladesh, and what Bangladesh has been through with the political turmoil over the last year, their currency's gone like this.
Yeah.
And there was a time where the Bangladeshi central bank put capital controls.
Yeah.
Money couldn't leave the country.
Yeah.
And trade got frozen.
Yeah.
And there was no other way to get money in or out. And so stablecoins provides a solution for when countries go through those periods.
What's also really interesting is, as you think of kind of what historically up till now, crypto and stable and all of that stuff has been, you needed to be technologically advanced, right? You needed to understand a cold wallet, a hard wallet, like all of that stuff.
Yeah.
We're saying, look, like you don't need to worry about it. We're going to abstract it out and we're going to put real utility behind it. And I think to your question, like, it's really hard to say like this is the winning thing. I mean, obviously from where I sit today, I think cross-border commerce or some amount of money movement is significantly more inefficient today if you're in non-US dollar moves. And so I think there's a sitting use case for that. But I think you're going to see a lot more utility where people are paying merchants in stables, already starting, right? Numbers are small, but they're growing pretty fast.
All right. Can you educate us on the key players in the overall stablecoin value chain, right? Like you're talking about chains, regulators. I mean, like obviously is
I heard the word provenance.
Yeah, provenance. I know. I was like, let me explain to you a complicated.
I think I said that so my mom would be proud that I knew the word.
It's like by throwing more big words at you. Okay, but like, I mean, you're talking about chains, so it's like, are the best stablecoins built on Ethereum, Solana, it's like. So who are the key, like what are the key steps in the overall value chain, and which ones should we like really be paying attention to?
We don't know who's going to end up winning. Each one of them believes they will win.
Yeah.
And they have a path to victory of different sorts and different size, scale and sizes. So hard to pick who's going to be the end game of this if we really put it out.
Yeah.
I think the reality is, look, you've got a stablecoin issuer, you've got a network that runs on it, you've got processors that figure out how to move it. You've got guys who give you wallets.
Whoa, wait.
Yeah.
That's going really fast.
Yeah, we need a whiteboard. Yeah.
So you had the issuers.
Yes.
Right? Because I actually want to learn about a couple of these steps, right? And then you said what?
Then you have the guys who give you the wallets. Then you have the network, which is the Ethereums of the world.
That's like the Visa, MasterCard analogous.
You can jump, but they're still primarily walled gardens in some senses. Sorry, I've just realized behind the issuer is one more thing. It's called a bank.
Yeah, the regulator. Oh, the bank.
Because
isn't the bank is the issuer? So wouldn't like JP Morgan issue?
JP Morgan does. It's called JPM coin. They do issue it.
Oh my God, JPM coin. The Jamie Dimon coin. Jamie coin.
But the point is like, how does the issuer, let's actually back up, right? So how do I give you a stable? You have to give me cash. You have to give me US dollar.
You have to start with cash.
I have to hold the US dollar somewhere. And against that US dollar that I hold somewhere, I give you a currency, right? A digital currency.
Yeah.
Now that digital currency needs a rail to run on, which is called the networks. The rails need endpoints to kind of sit somewhere. And those are, the wallets. And then you need, like, there's a bunch of players like us who are basically saying, look, how do we move it across different rails, different wallets, different markets, all of that.
Right.
But if you look at the core ecosystem of this is what it is. It's the end pipes, the pipes that run on it.
So the bank is JP Morgan, by way of example.
Yes.
JP Morgan does issue as well. Right? Would somebody like Wise be the wallet? Would that be an example?
No, the wallet that we're talking about here is a crypto wallet, or I would say an exchange or a wallet.
So like an exchange?
Crypto.com.
Crypto.com. Yeah. Okay.
Wallets.
Got it. And the network would be like
it's the chain itself.
Yeah. Okay.
The chain is actually where all the power actually sits. From a programmability blockchain perspective, the chain
things that can hold the warranty, what you were talking about earlier.
The chain also basically decides the cost of what it costs to move that thing and to build utility around it and to build incentives around it. The issuers are right now in the target zone just because of, obviously Circle's gone public at a beautiful valuation and a beautiful bump in the stock. There's also Genius, which is going to now make a lot of these stable coins actually count as good as cash.
Yeah.
If that happens, I can now hold stablecoins on my treasury, and from a liquidity perspective, it's not considered a high-risk instrument. This ecosystem is still being worked on.
Yeah.
And players keep coming in and out of it.
So I mean, like the chains themselves are reasonably well established at this point,
yes.
but I guess there's always
There's more chains always coming.
Yeah, exactly, right? Wallets, I feel like probably a relatively, I mean, again, a crowded market, but still a lot of room to play in,
Yes.
especially as you're getting moved as companies, and it goes into more of a B2B use case probably.
Yes.
Yeah, more issuers around the
there's
world.
going to be more issuers.
And then the banks are the
That's-
banks.
Yeah, I mean, I think there's a holder of value. Like, I don't. Maybe banks is where it is today, but like, who is going to?
They're a custody.
underwrite? They're custody of the fiat.
Yeah, in the US, you don't always have to custody with a bank, right? You can custody with a velocity would be a custody.
Yeah. Okay. So where do you see the biggest white space?
So I think there's a lot of play on the issuers still coming, right? If you look at most stable coins today, they're still US dollar backed. In reality, the market is run by two big stables. If you think of a world today where why do we have a Sing dollar? Why do we have an Indian rupee? Why do we have a Hong Kong dollar? Whatever it is, why does the world only need US dollar stables?
Yeah.
Right? If I say that at the same time that I have a bank account, a wallet, a card, whatever you want to call it, there should be a currency that is digital friendly that exists in all markets. The question, I think, which is a white space, is which regulator will actually set a very clean set of rules to build in that space, and not, maybe to a certain extent, not restricted just to a sandbox, but say, look, let's go like build real-time use cases around this. And what we're finding as XWeave is like, the system works today. It's just inefficient. It can be significantly more efficient.
But why do I need the third US dollar stablecoin issuer?
There's different advantages. I think what you're going to see is these different stable coins, or the next gen of stable coins that will come, will have to bring something additional, like a differentiator on top of like where US dollar stable coin.
Right.
I think yield is a great example. Right?
Okay, so some
like
perks,
like user perks, basically.
Yes.
So you start differentiating based off on like features.
On the features of the blockchain.
Yeah.
Yeah.
Like at the core, it's a US dollar. Yeah.
And is it the issuer that designs the blockchain specs? Who designs the blockchain specs?
The network does.
The network does.
Every time your card is accepted, there's value exchanged and you're charging someone for it. So I'm sure Circle doesn't just want to take your cash and give a bunch of stable coins out, right? And that's a great business, but they want that Circle USDC to go around. And the more it goes around, the better for that ecosystem.
Yeah.
And so they'll incent the behavior to have you spend it or burn it and me accept it. So they want more acceptance of USDC, I presume, and they want more issuance of USDC where people, that's how the ecosystem thrives. And we were at PayPal together. This was it. Like, you basically want the network to be alive.
I think it's more than the word acceptance, it's utility.
Sure.
Right? What are all the different utilitarian use cases of
where you can spend the money.
Of my asset, right?
Yeah.
Either where you spend the money, how does it reach the other place? Like, is it better? Is it faster? Is it cheaper? Like, all of those things. In the old days, a lot of the stablecoin economics, which was really helping it, was the yield, and like you got higher percentages for holding it. But the reality is, and I think this is where XWeave really starts to get exciting, right? Is we're saying we don't know who's going to win. We don't know which dog is going to eventually win this race, or whatever you want to call it. What we believe is this ride and this ecosystem is still very, very young in terms of utility that is there.
Can you describe for someone who doesn't know a lot about stable coins or any of the things we've just been discussing, say like me, what XWeave is actually doing?
I think the way we look at it is money moves today through a remittance player, through a treasury, through a bank, through whoever it is. It moves using a certain system that was built a decent amount of time ago. And what we believe is there is a next set of, let's call it protocols, right? Because we used that term earlier as well, where you can actually take money, digitize it, send it across borders, and show up instantly or near instantly at costs over time that will be cheaper or at least comparable at best, and have complete regulatory clarity. That is what XWeave does. So what we do is we go to somebody today who's moving money using Player X, like a large remittance company, global remittance company. What they do is they make you hold a certain amount of money with them as security. What we're saying is, look, if I take fiat from you in one market, we work with a regulated exchange in that market, we convert it into a digital currency, we throw the currency over to the receiving market, and the receiving market takes that currency and turns it back into fiat instantly, and then delivers it to the last mile. And so what we're doing is we're stitching a network or like kind of connective tissue to move that money. Most people will say, oh no, this issuer is the best, or this network is the best, or this wallet is the best. What we're saying at XWeave is you don't have to worry about it. We abstract it out for you. We run on what's called an optimizer. And we say this optimizer figures out what's the cheapest, best way to land the money.
Okay. Feels like you're making the B2B transactions easier.
We are.
Yes.
So we work only with businesses.
Yes.
They may have a consumer behind them. They may have a business behind them. What we do is we help them create a wallet with our exchanges that we work with. So it's their money, their wallet. They have full control
on your network.
And we are a set of APIs. That's why I call us connective tissue. Because
so your least cost routing is what you're trying to do?
Absolutely. We're
and so if you're growing your business, you're basically systematically going and creating more nodes on your network.
Yes.
So you got Singapore dollar.
Right.
You got someone in Philippines.
Yeah.
Then you go get someone in Indonesia. Then you go get someone in Australia. And the more nodes you have, then the more end-to-end combos you can enable.
And then on each node, you will have multiple providers in a grown-up state.
Yeah.
And so if a provider in that second is not performing as well as it should, we can switch you realistically to the next one.
But how do you make sure? So so let's assume I'm a exchange in Philippines, right?
Right.
And I'm happy to issue the Filipino peso, but how do you convince me to accept Sing dollar?
I think the reality is if you get people who are actually wanting to move on a specific asset, right? Like when you went from big rocks to small rocks as currency formats, what happened is people wanted to move those small rocks around and the big rocks couldn't move.
Yeah.
And so the reason the other guys were forced to accept the small rocks is because they said, oh, somebody's actually going to give me a small rock. It's about, can you make this cheaper than what you do today? So to your use case that you were asking about is today, the way we do it is we go through USDC, right? When you have your local stable, if you can create, and look, some of it, this is still early and it has to play out, but you have to go to them and say, hey, look, like I've got 100 million of volume that comes every year on this local stable. Will you clear it for me? And there's an entire network of like liquidity providers and stuff, which we didn't draw up here because it gets super complicated. But the point is there are market makers and liquidity providers that sit up there whose entire job is to make sure that every transaction works and you can actually go sell your asset and get fiat in return.
If you can't create a Naira to pesos, what you would do is you go Naira USDC pesos, and that is going to be a little bit more expensive, but it's possible because you can always do the two hop, and on all parties will accept that.
See, but why wouldn't you just go US dollar?
But if your expenses on the Filipino side are in Filipino pesos,
right,
you will effectively want the last mile currency. Because you're paying your people not in US dollar, you're paying your people maybe in pesos. So that's where you have to convert. But yeah, you're right. You could always hedge and you can always manage.
I mean, the more interesting thing is longer term, do you start paying your people in stablecoins and let them figure it out?
Well, this is the Genius Act you're going into, right? This is basically saying if everyone now can just trade in US dollar, does the demand for US dollar go up? And hence, does that effectively put the US back in a very dominant position? Yeah. Right?
It's looking good.
Thanks for making that point, Peter.
Yeah. Great segue. Thank you. Okay, so let's talk about the Genius Act. And this is exactly this is exactly what we came to realize after our last conversation. Because at the end of the day, money is power, right? Yeah. And so what the Genius Act does is it obviously regulates U.S. stables, and it obviously is a way to kind of maintain U.S. currency dominance on a global level. And so I think the questions on this one, was this one of the explicit intentions of the Genius Act to begin with? Two, and do other currencies have a shot of kind of like challenging the U.S. stables?
Two different answers on that one. One is we don't know. But I actually think that people will take a shot at it. And it may not be, you won't have like, whatever, 90 stables that are winning. I think you're going to have a basket of 4 or 5.
Like a euro.
I think it's going to be trade driven,
SGD.
right? If I'm a large exporter, a large importer, it actually
RMB.
Again, it doesn't make sense over time. If you think of the ecosystem, why do we have any other currencies, right? Whether it's for domestic payments, even for cross-border payments, right? Like UPI works over here with Pay Now to a certain extent.
Yeah.
Some of that is still going to exist, and there are ways to do it much more efficiently using programmable currencies or blockchain-based.
Yeah, the question isn't monopoly. The question is the Genius Act positioning the U.S. dollar to extend its dominance, the dominance that it has today?
Yes.
Because heretofore, if you'd have say this question a year ago, there were lots of questions about whether the U.S. dollar was actually going to be the fiat currency for the world.
Yeah. Well, I mean, I think you have local currencies because when you go to a certain country, you can only spend that local currency. But the whole point about stablecoins is that, and especially as they become more widely accepted, is that you may not have you may not need local currency. You can just go for these stables that are universally accepted.
I think for our listeners, can you describe the Genius Act? So we've kind of blown through it, right? So, so
I think this was US's attempt to bring back a little bit of control. And I think their view was, and I could be wrong now that it's been a few months, if you issue US dollar stable coins to Americans, you can still issue US dollar stable coins outside the US. Yeah. But if it touches Americans, then you must be registered and regulated in the United States, right? And effectively what they're saying is it can be backed by cash or cash-like instruments. If you're issuing US dollar stable coins and it touches Americans, you're going to back it by US dollar, which will be held in one of the US banks or the US Treasury. So that actually is a great way to, again, export US dollar dominance in the digital world. And I think this is, as we get more clarity on how it gets implemented, I think this is actually a great step forward for the US.
In addition to the administration itself, for the listeners out there, most of the listeners across Asia listening to this podcast would know how fractious and how screwed up the US is right now. There's about nothing that is bipartisan.
That's right.
Yeah.
This law passed with bipartisan, solid support, both the House, the Senate, 2/3 majority. This thing was
it was popular.
It was one of the few things that America has just kind of gotten behind, and that says a lot. Yeah, that says a lot.
It also, I think, I took the position, and this was my personal view, and Alexi corrected me, and I think we had a debate last time, and I'll just bring it back to our conversation. I said, effectively what you do is if you drive up the demand for US dollar through USD currency, now you can go out and print more, and you're actually effectively selling off more debt in the background, right? And so those are all second order effects of the Genius Act. Hence, I thought it was genius in the first place. Alexi disagreed with me. I think we just kind of left it at an open debate. But over to you, man.
Yeah, I mean, I think also the US Treasury was already sitting on a bunch of crypto from stuff that had seized as well, right? Which is now
didn't know what to do with it.
Bunch of others, like Silk Road is one of them. But I also think that it's a great way to say, look, the future's coming and we're going to lead from the front, right? Now the question is, will the others follow, or will they say, oh, we'll go back to a US dollar based economy? I don't know. Right? I think going back to your geopolitics is going to come down to how much do you weaponize the Genius Act? And I put weaponize in quotes, right? Because it's going to be well, if you're going to say oh, well, no, now I control whether you can buy US dollar stables if you're outside of the US, but you're going to, can you still buy it just like you can buy US Treasuries? So we're going to have to figure all of that out. A lot of that book is still being written.
Yeah, the regulations are still being written. But if you go down the law, as a layman, when you kind of read the highlights, the Anti-Money Laundering Act still applies. KYC requirements apply.
They regulate it, yeah.
That's right.
It's a proper regulation, right?
Yeah. They regulate it to make it safer, to make it more accessible, to make it more widely adopted.
Which is what government should do.
Yeah, exactly.
Yeah. And it builds
US
security.
Yes,
exactly.
It's security of mind for a user as well. I think that's a really important thing.
I think you use the word legitimizes in somewhere in there.
It does.
And if you legitimize something, now you're well, the adoption goes up. And
Yep.
And I think, look, the big kind of challenge in my head is like you have USDT, which is the tether, and you have USDC, right? In terms of volume, I would think USDT kind of dominates, just crushes it. But in terms of valuation, if you look at Circle enjoys much better valuations, maybe because it's onshore US company versus I think USDT or Tether is in Hong Kong. I think, again, like there's some favoring of kind of an environment which is regulated, understood by Americans.
Yeah.
And so
there's a reason why Tether's actually gone out and now launched USAT, which is a new coin launched by the same company, but is going to be fully Genius Act compliant.
Got it.
there you go.
So it's a stable coin. Yeah.
Yep.
It's another stable.
Yep. It's another
So
stable.
they will put an entity in the US and they'll hold US Treasury.
Yeah, like,
get
honestly,
approved.
I don't know the specifics around it, but we know that it's going to be Genius Act compatible.
Yeah.
Because I was speaking to somebody about it 2 days ago.
You heard it here first, guys.
Yeah. I'm curious to see the
Exclusive on
traffic,
60/40.
the volume between USDT and USAT over time, right? Because
Yeah.
like, why wouldn't you go for the safer one?
Yeah.
Okay, so then closer to home here in Asia, like which governments and which regulators do you think are a little bit more forward thinking about this? I think you mentioned a little bit earlier at the top of the show about, obviously there's some stuff happening here in Singapore and Japan. So who in Asia is making a good play at this?
I think everybody's trying, right? I think the MAS is very forward. I think the BSP in the Philippines is very forward. Hong Kong is also doing it. And I think their stables will come out in sometime in Jan 26. Japan's also very progressively
It's
looking
moving
at
fast.
it.
Everyone's working on it.
I think what you're going to see, right, is that I actually think of Genius as a tailwind into a lot of the other regulators saying, look, okay, maybe we don't need to be as anti as we were before. If a stable concept exists and then is now considered legit, clean, all of that, it's very easy for me to then create the rails and the boundaries, I would say, which is weird, right? Like, if you really think of a lot of the stables that exist today, they're still walled gardens, right? Like, I can't move between them. I have to literally sell one, go buy something else, and then buy the other. And I think there's this entire breaking of the walled garden, or like a backdoor, if you want to call it that, into each of these walled gardens. And I think the regulators are going to provide that kind of clarity around it, which will drive, to your point again, growth, comfort, all of that.
Okay, so then can we play hypotheticals for a moment, which is if you look at both the countries where the regulators are actively working on it are a bit more pro-stable, at least exploring it, and then where the demand will actually come from, like which stables do you think would actually do well?
So I think Prashanth talked a little bit about this. It's also about which stable that gets written or drawn or issued that has fungibility into it, right?
Yeah.
So for example, like Japan, Brazil is a monster corridor, been even when we were in PayPal. Like if the yen comes out and for some reason, if the yen stable isn't clearing into Brazil, it's going to come down to what else are you going to build in, how open your doors are going to be.
Yeah.
And I think whoever builds open doors while controlling it, in some sense. So it's like, I think of it as like, how do you ride a bike when you first put on the 2 wheels on the side?
Yeah.
And that's who's going to kind of loosen those wheels up and say, look, this thing's riding now on it.
It's like, if you want the freedom of a car, you better have road rules, right? Because everybody else wants the freedom of the car as
You
well.
need a driver's license.
Yeah. But naturally, like demand for like I don't know, what's a really small country? Guatemala. Like, like demand for like a local Guatemalan pesos
It should
stable would be like relatively low. Like that's probably not going to happen.
Yeah. So let me give you a counterpoint though.
Okay.
Right? Just to put it out there. The amount of money that actually probably gets remitted back to Guatemala, where Guatemalans need to pay for something, might create a use case where that country might need it and do really well with having a digital
And
currency.
avoiding
but
the
wonder,
USDC
I wonder
route.
if what ends up happening is Guatemala's economy. We're picking on Guatemala. I'm sorry
Yeah,
for
sorry,
any
sorry.
Guatemalan.
It's my bad. I started it.
I like the food.
listeners out there. Yeah, it's a very good, a very beautiful place, I'm sure. Like in subscale countries with high volatility, would the local economy naturally start sprouting out stable coins on US dollar? Like, would it just naturally?
Like, why would you peg
already
to
happens.
your local? Yeah,
Back to the t-shirt manufacturer in Bangladesh.
Yeah.
I'll just pay my workers in
Already
stablecoin,
happens.
right? And then if you're the worker, I prefer stablecoin.
because I can buy my bread in stablecoin,
Yes.
or I can then go, because downstream, as long as the last person on that on that value chain can accept it, you're good.
Yeah.
At any point, if that person is not going to accept it, that's where you have to switch.
Yeah, and by the way, that last mile acceptance is expensive. Like, I think today yesterday Grab announced something with OKX, which is an exchange. But I'll just say one thing. I don't think it comes down to only subscale economies. It actually comes down to how the currency behaves. Which if I've got a deflationary currency and I've got costs where I'm eventually paying, let's say like I'm forward paying a year out, I'm going to have to pay dollars to somebody.
Yeah.
I'm not going to move out of my currency, right? Move out of a dollar or whatever to your use case that you're talking about. So I think it's a pretty complex system. It's why do people hold different FX, right? Some of it is it's proprietary or prop, and I want to see the value go up, but some of it is utility.
I think that's what drives it. There's one point, I know we're probably going to wrap pretty soon on this. So one point, I want to tie this back to agentic commerce and agentic, everything agentic,
right? Put a bow on it.
Yeah.
Look, buckle up.
So I actually think we're missing the point of what stables can do, right? So one of the things I've always kind of thought that the US dollar is quite limiting, even when we're PayPal, is that we have two decimal places, right? Like say you have 1.99, right? And then that's it. But I think we're going to move into a world where more and more of these websites are going to close off, right? Actually, they may not close off. If they have this, their MCPs, what will happen is if I am OpenAI's crawler, and I'm, effectively looking for shoes that Peter wants to buy, I'm going to try and negotiate with you, Mr. Walmart, MCP, and you will basically provide me a search result for 1,000th of a US dollar or 10,000th of a US dollar. That search result, right? Like on your inventory, perhaps, right? Or your airline, or your like Expedia, and you're going to give me your travel deals for 1,000th. Now, today, if I was an agent had to do this, I'd have to park a bunch of money, right? Yeah. But now I can move 1,000th of a stable coin or 1,000,000th of a stable coin in for this particular transaction, and we could do very, very fractionalized agent-to-agent negotiations, right? And I think that becomes
better FX rates.
And much better FX rates and much better throughput, guarantees, no settlements, no old cruddy bank rails, because all those things were built for X.YY, right? Or X.YZ. And so I think that's another dimension that's going to open up with infinitely divisible stablecoins, where agents kind of go out and
I want the cheapest shoes. Congratulations, I save you 1,000,000th of a cent.
No, but that's what it costs you to go to and you could say, hey, this search you're allowed to spend 10 cents.
Yeah.
And you're going to spend that 10 cents by going to 1,000,000 sites, and you give them all a little tiny amount, and not park money in different sites.
And I think where I agree with you is all of these use cases are still being written.
Yeah.
We don't know where it's going to end up.
Yeah.
We'll figure out who does it better than everybody else. And look, the reality is everybody's learning from each other as well.
All right. I've got two final questions. One is, okay, we've established that stablecoins could basically upend the entire traditional financial system. Do you think there's a shot that one of the current traditional financial players will properly venture into this? We talked about JPMC already, and properly venture into this, and then kind of give all these new up and coming players a run for their money. What are the chances of that?
I think every time we've thought that the empire won't strike back, it does figure out a way to strike back in a different format, different fashion. I think the probability is pretty high that one of the big global players with true global vision will take a shot at it. Whether they succeed or not is going to come down to whether they change the operating models and the way they operate today.
Because everything is so ingrained in the corporate culture and everything. I mean, we see that all the time.
It's super easy to say, there's literally a million reasons to not do something like this.
Yeah.
Right? And you need somebody to champion it, pull it through, kind of just drag it through the entire organization and the organizational economics, the politics, all of that. And then at the same time, by the way, you got to keep adding value to your end customer.
Yeah.
And I think that's what's hard at some of these large organizations.
Yeah. For you personally, you've been, in large corporates all your life. This is your first entrepreneurial journey, if I'm not mistaken.
Yeah. It's my first founder journey. I've done a little bit more entrepreneurial.
Okay. All right. How's it been?
It's been a journey. I think that's safe to say. I think every day is learning. I have good friends who push me over the edge in terms of taking the shot, but also support me through it. Everybody says this. In fact, one of my investors told me this the other day. It's a lonely journey. Find your friends, find your kind of board of directors to help you through it. And super lucky to have a wife who's like, yeah, dude, like we're behind you. Go do it. But it's interesting. I think for me, we had a concept around XWave, and when we came out of the MassX incubator, we were actually the counter trend. Like last year when we were talking about stables and using this, nobody was talking about it. There were like maybe 4 or 5 of us. And then, a few big events happened, and now stablecoin or death, like as I like to call it, has happened. And so it's been great to kind of bump into it, but then also keep our head on straight. Like I said, maybe it's my LinkedIn. But it's fun. It's super hard and super great, like great team. And it's every day you take a couple of whacks, but then you just bounce back and keep building.
What has been the most surprising thing in terms of being a founder specifically?
I think people tell you that it's a learning journey and you hear it, but I don't, at least for my case, I didn't feel it. I was like, how hard can it be? Like, I mean, it'll be hard. Like, the business will be hard. We'll build the business. But I think it's not just the business. It's for me, it took a little bit of getting used to the number of people who tell you no. The number of people who are like, oh, dude, you're not that smart. Or your idea is really stupid. I don't know if you can say that, but the fact
we've said
is,
much worse.
Exactly.
So I think building the harder outer shell to say you just got to keep pounding away at it. It was surprisingly hard. I've done a bunch of other 0 to 1 stuff, and you keep fighting. Even in big organizations, you fight for stuff. But in a startup, it's also so much passion driven, and you're literally figuring out new things every day, and it's a lot of fun. I love it.
Awesome.
Oh, that's so great.
Can you close this out, Peter?
Do we want a poem?
Yeah.
We want a poem.
We want a poem.
Let's do a poem about stablecoins. This is a little playful one.
Okay.
Nothing philosophical.
Sure.
There once was a coin called So Stable. It danced on the digital table. It zipped round the globe in a dollar-draped robe, making greenbacks forever more able. But how about that?
That is super cool.
You can borrow that. You can put it on
I'm gonna put it up in our wall.
Just as I want the dash, Peter.
I was gonna say on your business card,
Poet, dreamer, podcaster.
Stablecoin vision.
Exactly.
Poet laureate of stablecoin.
Milind, thank you so much. This was incredibly educational. I feel like I learned a lot, lots to think about, and it's really exciting. I mean, it really feels like the entire world is kind of being rethought, redeveloped, right?
So cool.
Eyes. Yeah, it's super cool.
Yeah. Thanks for having me. I love the chat. Love the conversation.
Absolutely. Okay. Everyone, thank you for tuning in to this episode of the 6040 podcast. As always, you can drop any nominations for speakers or feedback at 6040podcast@techasia.com, and we will see you in 2 weeks' time. Bye.